Alright guys, I'm back. I'm going to try to make this short. Might be a little bit longer than I intended to be. Now, these two gentlemen has been it's a broken business model channel, right? And of course, it's about GameStop. And I watched this video a couple of days ago in its entirety, but I kind of forget most of it. But I want to point out a couple of points that I kind of look into it and I'm like, what is going on? Why are they presenting the data this way versus the other way? It will make sense later on when I show you the graph. But as far as, let me see. Hold on. Yes, this one, better. So now these two gentlemen, I'm not saying that they are paid or whatever. They're pretty, seems level-headed. So of course, it seems like they know what they're talking about. And hey, they are short, just like they're saying we're short GameStop, and they have their own thesis, and I have my own, right? I just have questions here. All right, without any further ado, I'm not gonna play the video. I have it on mute because I want you to watch the whole thing. I don't want to misrepresent anything, right? Now, let me go back here a little bit here. Over here, they talk about the market cap and the net cash position, the I think year to, I don't know what this means, 12 months, trailing 12 month maybe, is this is annual, and then this is operating loss, okay, years, 12 months, trailing 12 months, I think that's what it means. All right, so this graph, at first glance, you would see that, hey, it's going down, right? It's terrible, and the company is just keep losing money. Now, the question that I have is these two. Why are they including these two? Now, if you look closely, it says H1, 22, H1, 23. So why are they including that? I have a question. Because this is out of place. Now, in my thought process, this is first quarter of 22, first quarter of 23. So it should be on its own, not a yearly basis. But why are they including that? To me, they're trying to make you believe that look, this is year. This is per year. This is per year. This is not per year. So don't include that. Don't be trying to mislead people into thinking that, this is per year. Because if you look at the year, this is 22, this is 21, this is 2020. So this should be 23. But again, we're not ending. Quarter 3 hasn't ended yet. We haven't seen quarter 3 balance sheets yet. So you can't count that at all. Now, if you want to compare first quarter of last year versus first quarter of this year, then you should completely do a different graph. Don't include it in here. Don't try to mislead people. This is just my opinion, okay? Seeing the data in front of me here, that's what I'm thinking. Right? Now, that's one. So completely get rid of this because that's is irrelevant. The data doesn't match with the rest of it. Okay? So the right one would be this right here. So let me cut that off. All right. So if you want to be fair and square, this is what you do. Okay? All right, and then you look at another data. So over here, if you look at, I don't have my drawing pad with me, so bear with me. So if you look at this year right here, right, this is the year that Ryan Cohen bought in. He wrote, how did I know? He wrote the letter to the board of director on this date because he had taken close to 10% of this company. Okay, now when you buy 10% of any company, you are required to file with the SEC, which he did, and he coupled with a letter. Okay, where did I find that letter? Right here. So this is the letter that he wrote to the board of director. I will link it down below if you want to read it for yourself. Don't believe me, just my words, okay? It's being filed. And then if you look at the buy order that he even add more than that 10%, you will see it here. So as you could see, he got in at the end of 2022. Okay? So the year that you saw me draw here, right here, is the year of Ryan Cohen got in here. So if you want to be fair with this analysis, you shouldn't even include these three. And if you do, make sure that to say that this has nothing to do with Ryan Cohen. This downturn, that has nothing to do with Ryan Cohen. But what you should have point out is the fact that when he got in, the revenue went up. Okay? Now, I see that you get a point there where the profit, the adjusted operating profit is in a red, meaning that we lose money here. Okay, now let me go back here because it's kind of distracting. So all in all, I think that this graph is a little bit misleading. If you want to attribute this to Ryan Cohen, then do it right. If you want to attribute it to Ryan Cohen, then just count these 3 years right here. This 3 would be a more accurate representation of what Ryan Cohen has been doing for this company. Okay. So 3 years is not much to go off of. I'm not saying that, he's going to continue to do better here. I could only speculate because I don't see the data yet. But if I see this data right in front of me, I would say that, yeah, he did pretty good. Look, revenue went up. Gross profit went up. It's small, but it's still up ever so slightly. Okay. The same way with here. Okay. Hardware, software, collectibles. The same deal happens here as well. You shouldn't be including this data at all. And if you look at these are old leadership, by the way, because Ryan Cohen got into the stock right here. He has more influence. He has influence in the company, making changes right here. Okay? Again, these thing, yes, it declined before Ryan Cohen got in. Okay? And then when he got in at the end of the year, mind you, the revenue pops up a little bit. Okay? Not by much, still a little bit, but every metric that you are measuring, look at it. This is software, this is hardware, this is collectible. Okay? And then 1 year in, he was able to increase a little bit on hardware, increase maybe around the same for software, and then increase in collectibles the same way next year. Okay? So in the year before, a little bit lower than the software, on the software aspect of it, but hey, he ramped up the collectible. Now, when I said he, I'm sure it's not just him, it's the board of director that it's work in tandem here. So, and of course, like the CEO as well. Okay, so let's get that out of the way. So by my metric, Ryan Cohen is actually doing better for the company, right? With the exception that, yes, he did spend a little bit down here the previous 2 years because he's trying to build something, build a foundation, rearrange something, cutting out some stores and all that stuff. That require a little bit of capital. But where did he get the capital from? Let's move on here. That's later on. Now, even in this uptick in store revenue is shown here as well. Now, in this particular slide, there's trying to say that, oh, hey, there's more stores being closed and all that stuff, which is evidence in this one, in the gray line. Yes, the number of store was down. However, look at it. The year in which Ryan Cohen got in, it went up. The revenue per store went up. The gross profit per store went slightly up. Let me say that again. The fact that you showed this whole thing to say that it's downtrend from here, this is disingenuous in my opinion, because you're not representing the year in which Ryan Cohen got in. Now, if you want to say that the whole industry as the physical game and all that stuff paint that picture, sure, if that's what you want to do. But again, this is different leadership here. If you look at the balance sheet and of, let's see, other company, they're doing much worse on the expense side of it. Ryan Cohen is able to cut down expense in order to make more profit for this company. Okay. Now, yes, they're not net positive yet, but wait and see. Okay. Keep in mind, this guy just got in less than 3 years, and they already, paying him to be the biggest failure already. It's like, what are you talking about, man? But anyway, I digress. Now, over here, this slide, they're saying that the bullish case for GameStop hasn't been addressed, and that the focus on e-commerce and all this platform has been a failure. Well, mind you, they still have this money, cash on hand, even more. Actually, yes, they were able to take advantage of the rise in stock price, and they sold some of the stock price into the run up, and that was the smartest thing to do, because you don't even affect the run up of the stock at all, right? If you want to compare it to AMC, Adam Aaron went behind closed door to sell massive amount of share to insider, people in the know. Antara Capital is one recent example. He's not going out to the public to sell it to the public. So the public got all of this share at that price, at a higher price per se, but at least you got the company to have that money right here. Now, like I said, they still have this cash on hand. In fact, they increased it by $90 million, if you want to be exact. And yeah, they're managing this money pretty well. And that was 3 years ago when they had this money. And then as far as like e-commerce stuff, like the fact that they're saying that Ryan Cohen is not doing much for this company because of e-commerce going down. Well, everybody is going down in the e-commerce space because nobody has money to spend. Even Amazon, has some slow growth in revenue here. Nobody could beat the growth of revenue for these two, right? But what is troubling for Amazon is the fact that their cost of doing business is going higher. You see how high it goes from... You see that? The graph is going higher. So that's bad. And then look at the revenue. It's kind of like trailing the same amount of time. Now this is like a trailing 12 months, okay? If you look at the balance sheet for Amazon, trailing 12 months, look at how their net cash is nowhere near the ratio of GameStop. Okay, if you look at the GameStop trailing 12 months net cash, in the positive. Okay, so that's one there. And the fact that they're saying like, oh, the competition is not Amazon, it's Xbox, PlayStation, and all that stuff. Well, look, if you look at GameStop.com lately, you would see that they don't just sell physical games. Digital download never have been a problem. Okay, sure, you could download it directly from the provider itself, but you still need hardware. You still need all of this stuff to play the game with, which GameStop has done. Is expand their catalog. They sell more stuff, and not just $5 collectible stuff. They are selling hardware to people. There you go, sold out. Okay, there you go. Half of it sold out here on this page. So the fact that they're still stuck on saying that, oh, this is a dying business model, this is completely untrue. Well, at least, based on my assessment, is that they're not telling you the whole picture here. Now, in this one, he is trying to say that the NFT marketplace was a complete flop, complete disaster. In my opinion, I have a different opinion. Obviously, the regulatory uncertainty. Because of the regulator, they going after not just GameStop, the whole freaking market, the crypto space. Now, I have my opinion on that, as to why they do it, but I'm not going to get into here because it's going to be too long. But my opinion is that this platform is going to be here forever. Okay. Now, low maintenance, and the site, you don't need to kind of maintain it that much. It's done. Those are one-time costs, but it's not a complete waste at all. They still hold the rights, the trademarks, the whatever, to that particular website as an NFT marketplace where you could exchange value into in-game items, okay? And it's still in a developing stage. It's still in a beta, obviously. They're learning more and more about this type of business, whether it's viable or not. And, if you look at their, let's see. Okay, give me a minute. I'll be right back. All right, I'm back. So if you look at their page here on X, used to be Twitter, you see that they are doing polls and, trying to find out what the customer need as a, either shareholder or just somebody who's enthusiastic about the NFT aspect of it. NFT is here to stay. Crypto is here to stay. Look at the news lately. You have a lot of people, even the big institution out there now, they're all about crypto, right? Citigroup and all that stuff, they're tokenizing, a whole bunch of asset onto the blockchain. So to say that this is a complete flop is so short-sighted, very short-sighted. But of course, they're short. I mean, what else can I say about them? Now, with this point right here, they're saying that Brian Cohen and the leadership, they show a complete lack of judgment when it comes to, partner up with FTX. Now, everybody was blindsided about this particular company, including the media. Okay, people were pushing this particular platform to everybody. Right, so they have no reason to suspect that there's nothing wrong with this one. Right now, I agree that they were probably didn't do too much of a research into who backing to this particular company, because they want to push out the NFT marketplace to the market quicker than they intended to. But hey, they're trying to do business here. Obviously, they want to make more money on that space, and they think that they could capitalize on it as quickly as possible. But they didn't lose anything, in my opinion. Yes, it's a setback, but it's not the end of the world. With the CEO being ousted, we don't know what's going on there. Is it a big concern? Well, it's kind of, but not really. Is it a big concern that they don't have a CEO? No. Is it, how about the CFO? No. The reason why I said that, well, because of the previous data that you show right here. Without the CEO, look, uptick. So as long as they keep that revenue coming up without the CEO, I have no problem whatsoever. Okay. And then on top of that, you don't have to pay a salary for CEO. There's no, it's a win-win. Now, as far as the dumb money, the movie's coming out. I might go to see it tomorrow. We'll see. And, but, I know that there a concerted effort into kind of driving volume away from GME into other stock, right? And so the fact that they're saying like, hey, the fundamental of GameStop is still the same, it's still a dying business, I disagree. I have, it's remained to be seen. I think, you need more time than that to play out. And I'm excited to find out, hey, fourth quarter is going to be the better quarter. Third quarter, they might, as some people would say, they might put more money into the inventory. So you might see a loss there. Third quarter, kind of, a cliffhanger there. But I hope we're showing a little bit of positive here, even in spite of kind of losing $2.8 million last quarter. That's not by much at all. But anyway, so I don't want to make too long of a story, but my conclusion is that it's a little bit biased, disingenuous, the way that they present the data to make it sound like Brian Cohen is doing a terrible job here, which I disagree. Again, I own this stock. Obviously, I'm going to disagree with the short seller here. All right, guys, that's all I have. You have a great day.